We need reassurance for our investments, and there are risk-free alternatives available. And mutual funds are not allowed to assure you any return. They are prohibited by the law, but still, what should you expect from the various kind of mutual fund that exist today? Because they invest in an underlying where there is a framework of for your expectation.
Hello and welcome to Investors Hangout. This weekly interaction to help you learn and understand savings and investment issues is brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. Now, when it comes to investments, the first thing you want to know, how much return will an investment get you? How much can you earn from your investment? No one really chooses an investment with the hope that it will get you modest gains. So when it comes to mutual funds, what kind of returns should you expect? Can mutual funds help you become wealthy, financially independent? We'll talk about that in today's episode. Keep watching.
There are many things which affect investment performance, investment returns, and all those factors also has a bearing on mutual fund. Mutual fund is nothing but invest in those investments, only making investment in some asset class or the other. And the things that affect investment are variety of stuff. There could be a greater uncertainty which has a bearing on equity, inflation which has a bearing on equity, as well as fixed income. So there are many things which has a bearing, and of course, if we have poor companies, if they are bad companies, if there are companies in a poor health, and they have issued bonds and they don't pay in time, they default, or if they are delaying the interest payment, your bond fund will suffer. And likewise, if somebody has invested in such a company's stock, then your stock will also struggle. Stock performance is a function of an ability of a company, or the company's earnings potential as well as current earnings. Everything and anything which affects the sentiments and the performance of companies has a bearing on mutual fund returns. Different kind of mutual funds are meant for different time period. So liquid funds are not meant for a long-term holding, and equity is supposedly held for or suggested or advised that okay, hold it for the long term. If you have many years, your investment is for many years, invest in equity. And that is what we also keep repeating time and again. Liquid fund, which are the least risky, they are also they have delivered nearly 3% over the last 6 months, which is handsome, 6% annualized. Short duration fund, 7%, which I would say is decent. And equity savings, which is nominally into equity and substantially into fixed income, that has given 7.5%. Aggressive hybrid funds over the last 5 years have delivered 11.71%. And flexi cap, nearly 13%, 12.81% annualized over the last 5 years. I'll explain you how and why interest rate has a bearing on the return expectation of investors. And that does not mean that it will materialize. It just refers to there are two dimensions to interest rates. One is that if you take no risk, if you don't take any chances with your money, if you put your money in a post office deposit or a bank deposit and you get some return, and if you invest in equity and if you don't get as much return, you will not invest there. So it must make worthwhile, it must make sense for you to be rewarded for the risk, the ups and downs that you are taking. Or if you are investing in a bond fund, for taking the risk of putting your money in a company where there might be a risk of not getting your interest and principal on time. So if there is no reward for that risk assumed, then you will not invest there. And that is how in the financial markets these risks, the risks that you investors assume, gets priced, and that reference point is the prevailing interest rate. Now, it also has a bearing. If interest rates are very high, companies incur those expenses, higher interest rate, and that reduces their profitability. So it has multiple effect, investors available expectation as well as companies earnings. Now, long time ago, 30 years back, when Indian economy opened up, our interest rates were regulated. It used to be very high and market was not accessible. So the risk-free return used to be 11 or 12%. I remember, there used to be a RBI bond which used to earn 11% tax-free 30 years ago. And 11% tax free if you get, then your natural expectation will be that you must get 20%, 25%. And that is my expectation even now. Twice as much as what I will earn on a risk-free basis for my long-term fixed income investment, and that happens to be 7% today. If you look at about 7% today, so my expectation will be twice as much, very simply put. But that doesn't mean that you will get it. And whenever you expect the risk to be rewarded, it does not come like a fixed deposit return. It does not become payable every quarter. 1 year you will get high, you get more. 1 year you get, and it comes with great ups and downs, which may not be very easy to reconcile with. Mutual fund returns are not guaranteed for two reasons. One is that it cannot be guaranteed because mutual fund is a transit vehicle, so to say. You put money, you give your money to a mutual fund, and the mutual fund invests, and whatever return your money earns on those investments, you get it. It could be higher, it could be lower. Sometimes you can lose money. So it is a pass through. Mutual fund is just a vehicle through which you invest in a manner where somebody is keeping an eye on those investments. One is the legal bit. SEBI rules do not permit mutual funds to assure any return, nor should they, because everything that a mutual fund invests in comes with a market risk. Even though it is relatively safer when a mutual fund is investing in a liquid fund, and the likelihood of that going down is very low. But it is impossible to actually say that one will be able to deliver 4% or 3% or 2.5%. This is the range of return that you can earn. So that's perhaps the reason why SEBI does not permit even the least riskiest fund to assure any return. To err on the side of caution, I would say that fair could mean different things for different people, but what will be a conservative expectation from our investments? And you don't have to be fair about your expectation. You can unfairly expect, and sometimes it materializes. Liquid fund should earn about 4.5% in the coming years. Short duration fund could be in the vicinity of 6%. Likewise, equity savings fund could be anywhere between 6 to 8%, depending on equity performance, because there is a 10, 15%, 20% equity allocation here, and that will bring the ups and downs here. And aggressive hybrid fund, I would say expect less than what it has earned in the last 5 years, but that will be in the vicinity around 9% will be my conservative stance. That does not mean that I am pointing you that I expect this much. I am saying that there is a likelihood in a 5-year time frame, this will be my expectation. And from FlexiCap fund, somewhere between 10 to 11%. As I was saying earlier, that if I am taking some significant or meaningful risk, I would expect twice as much as the risk-free return that is available in the system. But a conservative stance will be 1.5 times. When I look at all the alternatives that is available to an individual investor, and the way it is accessible, the ease with which you are able to invest, I think equity funds hold promise in a sense that they have been able to demonstrate in the last 30 years that they are able to beat inflation, and ability to beat inflation in a reasonably secure manner because of your holding period. Equity will be very unsafe if you are looking at few months, few weeks, few days, and if that is your time frame. But if you are investing for few decades, I am very confident that the kind of return 10%, 11%, 12%, 13% relative to the interest rates prevailing in the economy is very significant premium to the risk-free return that you earn. So these are the funds which can make you wealthy.
Well, that's all we have for you in today's episode. Keep watching this space for more information. If you like the show, do subscribe to our YouTube channel. Take care. Bye for now.